Good afternoon, and thank you for joining us today. My name is Lori Drake, and I am the Building Blocks Community Manager here at Handle. For those not familiar with Handle, we have a platform that is purposely built for building materials suppliers. It focuses on lien rights management, job research, waiver compliance, and a dedicated payment portal. Thank you for joining us today for Fraud is Everywhere. You have to know where to look. Please note that I will manage the chat box and relay any questions that you may have to Wanda, or you can just take yourself off mute and ask her directly. If you have been in the credit industry for many amount of time, you probably know who she is. She is an attorney specializing in commercial litigation and corporate creditors' rights in corporate bankruptcies. She has been an instructor with the National Association of Credit Management for over 30 years. And she has been past president as well as member of the Commercial Law League of America, also for over 30 years. She has shared her time and experience with this community, both virtually and in person many times. And I am very excited to introduce you to Wanda, and I will let you take it from here.
So we're going to start with the basics. I've done some fraud presentations in the past, and I've done them in connection with, cybersecurity and identity theft. But today we're going to focus purely on fraud in the construction industry. And when I say start with the basics, it's for a simple reason that before you can even determine if there is someone trying to defraud you or what you can do to prevent fraud, you have to understand what fraud is really all about. It is a deliberate act. There's no question that the person doing the defrauding or deceit is intending to do it. And their intention is, I'm going to fool you because I'm going to get something out of it for my benefit. You'll be harmed, but I will benefit. So we lawyers rely on something called Black's Law Dictionary. This was a book that was about 6 inches thick, and we used to go by it page by page long before things like the internet existed. And Black's Law Dictionary is our Bible, if you would, and it defines fraud as a knowing misrepresentation of the truth or concealment of a material fact to induce somebody else to act to his or her detriment. So these thieves, if you would, or fraudsters know they're lying to you. They're going to conceal all the facts they possibly can because they're going to try to trick you to act in your detriment. And of course, your trade credit grantors, what are they trying to trick you to do? They're trying to trick you to sell them goods or give them services that they have no intention of paying for. So when we look at fraud, we have 5 basic elements. And this is across the board, whether it's construction fraud, cyber fraud, identity theft. These 5 basic elements are across the board for fraud. Lie, misrepresentation of a material fact, not just some minor detail, but a misrepresentation of a material fact. The fraudster knows it's a lie, but says it anyway. Why? Because the fraudster has every intention of harming you, fooling you into doing something. You, the innocent victim, justifiably rely on the statement made by the fraudster. So we're going to talk a little bit about credit applications or contracts or purchase orders. Well, you rely on the information that's in that documentation. And as a result, you go ahead and you sell your goods and you find out you're not getting paid for them because the fraudster has, in fact, stolen those goods. You may never find that fraudster. They may, in one instance, not in the construction industry, I do some work for Cisco Foods, and they, of course, deliver food products to restaurants and airplanes as well, but they also deliver all kitchen appliances. And we had an instance where the truck from Cisco delivered the appliances. A person met them at the back door and said, "Oh, we're not ready to take them into the kitchen yet. We're not finished modeling, setting up the kitchen. Just leave them here on the driveway and we will go ahead and put them inside." Well, what did this truck driver know? He believed that he was delivering it to John Doe, and John Doe signed for the goods, for all the equipment. The truck driver left, and what we found out was about 10 minutes later, another truck pulled up, loaded all the kitchen equipment onto the truck, and took off for someplace unknown. We found out only because people around had seen it happening, but we never were able to recover the goods. So Cisco lost a truckload of kitchen equipment. So you can see that it can happen in many ways, many devious ways, but they are looking to injure you because they don't care. The victim, in that case, Cisco, justifiably relied on, oh yes, I'm John Doe and I will sign for the goods. When we attorneys go into court on a fraud case, we have something called badges of fraud that we have to prove. And I include it here because the more that you, the trade credit grantor, can understand what we, the litigator, has to prove in court, the more you will understand what you need to keep, accumulate, document, and be willing to testify to. So some of the badges of fraud, I'm going to go through a few of them, several of them right now. Frequently, you in the construction industry and in every industry will see that income is understated by the deceiver. So they're not showing you what income they really have because they may not want you to know what they have, or I probably should add here, or the income is overstated by the deceiver. So you're fooled into thinking they're just a poor little mom and pop, or you're fooled into thinking they're a very successful large company, and you take that for granted, not knowing that in fact it's all a paper ruse. You've heard the word Enron. Probably none of you ever had anything to do with Enron other than reading about it in the newspapers. But Enron was probably one of the largest frauds that took place in the United States. And what they did, they had their income understated, but they had their inventory overstated, and they had accounting firms help them do it. So companies were lending them money, companies were selling them good, not realizing that these financial statements they were looking at were false, which of course is our third bullet point, financial discrepancies that couldn't be explained. In the Enron case, what we found later on when the accounting forensic accountants got into the computer books and records, they found statements in there that were supposedly internal. One of them said, we both know that this inventory level is false, but we have to keep this number there. Otherwise, nobody will sell us goods. So they openly, internally, were defrauding people. You'll often find the books and records are incomplete, inadequate, or falsified. Well, let me tell you an instance that happened to me when I was a young attorney many, many years ago. We had a case in Oklahoma. And in Oklahoma, the debtor had called a meeting of its creditors and deliberately did not include about 5 of its largest creditors in the meeting. The rest of the creditors went to a meeting, formed themselves into an informal committee, and they did what we call an out-of-court composition agreement. Well, our clients found out about it. How? By talking to each other. Just as all of you attend trade credit groups, so did they. And they found out at a trade credit group, what do you mean they had a meeting of creditors and they entered into a composition agreement with the creditors? We're the largest creditors. We knew nothing about it. So we brought them into the bankruptcy court based on fraud, that they should be in bankruptcy so that an examination could be conducted of their financial affairs. Well, I had local counsel working with me in Oklahoma, and I expected local counsel was handling everything, although we were involved in discovery. Well, let me say this. We tried to be involved in discovery. What we kept getting was stonewalled from the accountant for the debtor and stonewalled from the debtor's attorney. Oh, we're going to get you the books and records. We're going to get you the books and records. We're going to get you the books and records. They're not complete. We know they're not complete. The accountant is fixing them. Well, it came down time to go to court. And lo and behold, my local counsel said, oh, I'm not a trial attorney. I just do paperwork. So I flew into Oklahoma City. I went into court. And, you hear stories about some courts don't like foreigners. Well, I walked into that courtroom, and I'm going to use each of your names right now. And the judge turned around and he says, oh, good morning, Lori. Oh, I saw your daughter in her dance recital. Oh, she did a wonderful job. You must be so proud. And Oh, good morning, Wendy. And your little boy, he's playing soccer now, I see. Congratulations on that. And oh, and Tracy, I hear your son just received his first communion. And then turned to me and said, good morning, Miss Borges. Well, the minute that happened, I knew I was in trouble. So we went forward. We tried to have a trial. The accountant at that date produced the most perfect set of books and records. Not one strike through, not one erasure, not one number out of order. And he testified, Judge, I'm an accountant and I swear these books and records are now adequate. The debtors' books and records were such a mess. They had drawers full of receipts and purchase orders and invoices and bills. But I cleaned all that up, Judge, and these are perfectly complete. At the end of the trial, the judge turned to me and he said, Miss Borges, I am convinced that there is fraud here, but you didn't prove it. Well, how could I? The accountant was swearing on a completely perfect set of books and records, and the accountant was a bald-faced liar. So what the judge did in that case was he suspended the case for 6 months. And he says, I want to see that creditors get money here. And he turned to the debtor. He says, if creditors don't get paid a good percentage here, you'll be back in court in 6 months, in bankruptcy in 6 months. Well, sure enough, they paid a decent percentage and the case was dropped after that. So you'll see things such as financial discrepancies that just don't make sense, or books and records that are a mess or incomplete or inadequate. And what they're doing basically is concealing assets. Another fraud instance we had a warehouse that had a fire, and the debtor insisted that all of its assets were in that warehouse and everything got burned, and it was pursuing an insurance claim. And the insurance claimant and the fire department determined that it was arson, so they wouldn't pay on the insurance claim. Creditors were left holding tons of money, and it turned out we found there were assets in other warehouses that were concealed that nobody knew existed. So we didn't find enough to pay creditors 100 cents, but we did find enough assets to pay creditors something. So you'll also see sometimes we have to show that the debtor was participating in illegal activity and hiding its participation. Of course, they're not going to reveal it to you. Another badge of fraud is concealing their sources of income. Unexplained bank deposits. Well, I just got a hold of your bank records and we see these bank deposits. What are they? Where did they come from? Is that for goods sold and delivered? Is it a loan? What is it? And the debtor shrugs and says, I'll have to look into that. And sometimes they'll use a false tax ID number, which doesn't belong to them at all. But how many of you actually look up tax ID numbers when you get them? Or it's on a piece of paper, you get it, and you say, okay, and you file it away for the future. And we've also seen false social security numbers in the case sometimes of an individual sole proprietor or a personal guarantor. And we found some of these personal guarantors or sole proprietors actually use social security numbers of people that are dead. So they are out there and they know how to hide things. So when we think about fraud, there are several common types of fraud. Corporate fraud, a lot of which I've talked about. Internet and cyber fraud, which I'm not going to touch on today, but this is probably number one prevalent fraud going on today. Right behind it is credit card fraud. And you, in your industry, can very much be impacted by credit card fraud as well. And there's insurance fraud, as I mentioned already, the warehouse that burned down, and it turned out the warehouse was empty, but it was arson. And identity theft has been around longer than any of us care to think about. So with those basics behind us, let's talk now about fraud in the construction industry. There are many types of fraud in your industry. Some of them don't involve you as trade credit grantors at all. Some of them will involve you. Billing schemes actually take place on the side of fraudulent or fraudster vendors, and they bill for things that they didn't deliver, or they bill to different entities, all in the expectation that somebody's going to pay this false bill and not pick up on it. Bid rigging and collusion, this technically comes under the realm of antitrust. Bid rigging and collusion are felonies under the Sherman Antitrust Act. And what happens in bid rigging And a typical way that you see bid rigging in the construction industry is that they will talk to each other and that they will know what the bids are, even though they're supposed to be silent bids. And you'll get 3 or 4 together and they'll agree that, okay, so the first go round or the first job that's coming up, oh, Tracy, you're going to get this job. And the next time the next job, well, Jake, we'll defer to you. And the third one, Wendy, and the fourth one, Lori, and so on. Well, the idea of sealed bids is exactly that. The idea of a sealed bid is so that the owner can get the best bang for his buck, so that he can get, in fact, a contractor or a subcontractor that is going to do the best job possible at the most economic price. So bid rigging and collusion hurts everybody. It hurts the owner, and ultimately it could hurt as well you trade credit grantors, because when you start selling into this job where the bids were rigged, there may not end up being enough money to go round because the owner may have completely miscalculated. Kickbacks and bribery. So I was sitting at a mediation table in New Jersey about a month ago, and my mouth almost fell open because they were openly talking about kickbacks. Well, what happened in that case was my client was a subcontractor. The contractor, the general contractor, ended up in bankruptcy. The general contractor sued my client, claiming that my client owed money to the general contractor for money for part of the project that ultimately should be flowing through the general contractor and up to the owner. Well, what my client said openly and honestly was no, because when you couldn't do the job, we had to go and get somebody else to complete the job. We worked with the owner. I'm sorry, I misspoke. My client was the owner. We worked with another GC and other subcontractors. We got the job done. In fact, we don't owe you anything because it cost us more than it would have cost with you. And they said, yeah, but how about this? And I think the number was $370,000 to the other owner. And they said, oh yeah, well, that's what we pay him. He brought us into the case. We worked the case together. We got the job done. And since at the end of the day, we had bid the job at call it, $2 million, and it came in under $2 million. Well, that's his kickback that he gets because there's excess money lying around. And of course, lawyers learn to have a poker face, and I do. And I just sat there and I said, oh my God, my client just admitted to kickbacks. That's not legal. And nobody's blinking an eye. So apparently in that particular area, it was very common. Then we see things such as material and equipment theft. So you might be a vendor who has sold equipment or maybe rented equipment for a construction project. And lo and behold, they tell you that the equipment was stolen or the equipment broke. And it turns out there's nothing wrong with the equipment at all, except they conveniently stole it and sold it to somebody else, got money for it. And now we're telling you, oh, we can't pay you the rest of the rental. We can't pay you for the equipment. It's gone. It disappeared, when they themselves are involved in that scheme to steal the equipment. Change order abuse. Now, here is a case where I see my trade creditors getting hit more and more. Some contractors will give you change orders that were not authorized, and you now will sell your goods or ship your goods based on a change order. Lo and behold, the owner comes along and says, we never authorized that change order. It's a common fraud scheme. I've had several cases going on with it. One was, of all things, a child's playground. And you would like to think whoever is involved in terms of a contractor building a child's playground, and the child's playground was going behind a Jewish synagogue, that, oh my gosh, really? You're ripping off the synagogue and you're building a child's playground? But they did, in fact, there were change orders, and then they refused to pay on the change orders because they said, we never put those change orders through. We never authorized those change orders. And we determined that it was an individual that was on the job that was issuing the change orders. The synagogue didn't know about the change orders. The legitimate contractor didn't know about the change orders. The trade creditors shipped goods and never got paid. How do you go after the contractor or the owner when you can't prove that they authorized the change order? So in this instance, I am telling you, make sure your change orders are authorized. We had another instance, same situation with roofing material. And the roofing material was sent in. Some of it was tar. Some of it was, of course, the sheets. And likewise, the owner said, I never authorized that. And in fact, I threw you off the job because we decided your goods weren't any good. Well, the vendor didn't know that. The subcontractor didn't know that. Was it collusion between the owner and the general contractor to get goods delivered and used and not paid for? Ultimately, on that one, we never were able to figure out where the lie lied, but there was a lot of money lost on that. Let me tell you something else about change orders. And this is not fraud, but I have to segue into this. Those of you that sell to any kind of municipality, make sure, investigate the laws of the municipality before you start selling. We have an instance where our client, trade creditor, sold goods to a fire department out in Long Island, New York, and then the contractor was giving change orders to the vendor. They were legitimate change orders in terms of they actually did use the equipment in the job, and the fire department enjoyed the use of the equipment. We sued. When we sued the fire department for not paying for these goods, their attorney came up with municipal law, and the fact that the contractor signed off on the change orders and there was no signature from the fire department, and they had a 30-day notice provision that we had to have noticed a claim with the city where the fire department was within 30 days. My client had no basis on which to continue the lawsuit. So just a note, it's not fraud, but if you're dealing with the municipality, make sure you find out what the deal is in terms of their laws. So what do we see in terms of unique characteristics in the construction industry? Well, most jobs are high value transactions. It's not just that you're delivering $50,000 or $10,000 or even $100,000. You're often delivering goods in the $1 million plus range. So you have to watch more carefully what's going on. You often have very complex contracts. We had a situation, and the bankruptcy was in New York. The part of the project was in South Carolina. The contracts involved multiple owners, locations, and general contractors, just trying to decide against whom do you file what mechanics lien. Took a lot of doing. So you got complex contracts in your industry, and that is unique to you. Likewise, multiple stakeholders. There are going to be a lot of vendors selling into a project, maybe multiple subcontractors, multiple material men. You might have different unions providing the different workers that work on the project. So there are a lot of people involved. Again, in your industry, there's a great deal of reliance on general contractors and subcontractors, and they're not always the most upright that there are. You need, and we'll talk about it later, you need to really know who they are and who all the proper names are. You also see in the construction industry cash-based transactions. You probably don't want cash, but there's probably a lot of cash going back and forth between the GC and the subs and the owner. So what does this mean to you? It means you have to identify the correct players in a construction transaction. I always like to start with the credit application, but I know that especially in the construction industry, there aren't always credit applications, but some other documentation to identify who are the proper parties involved. The information that you get at the beginning is going to guide you tremendously as you move forward toward litigation. Knowing who are the owners, who is general contractor, or are there actually two? Not usually, there's usually one. Who are the subcontractors? Because there are probably going to be many. And you want to clearly identify to whom you are selling goods. We had a case several years ago, and there were two entities. There were actually more than two, but two in particular. And one was called Advanced Transit Mix, and the other one was called Advanced Ready Mix. They were identical in ownership and identical in what they did. Both of them bought cement from the cement companies and made ready mix concrete. But what the cement companies were doing foolishly were Advanced Transit Mix would order cement and ask it to be delivered to Advanced Ready Mix site and vice versa. And they were right next to each other. The two companies were right next to each other. And they were also owned by members of the same family. Well, when we looked, as we were starting to sue, well, we know who the owners are. Now let's find out who really owns what and who has what. Because we were going to go after them. They gave all the perfect documentation. The cement companies had credit applications, security agreements, personal guarantees. One of them even had a mortgage on the individual's home and another second home up in Vermont. Well, that was all well and good, except when you try to go into court. And then you find out, well, the mortgage is well and good, but the ownership of the property is not in this person's name. It's in that person and the wife. So now you've got marital joint property laws that you have to deal with. We actually were able to foreclose on the mortgage on the property in Vermont and get that back. And the interesting thing, the owner was fine. You can have it. The only thing I want out of that house is my hunting rifle. All right, we weren't going to quibble over a hunting rifle. We let him have it. But then what we found was that one of the owners had nothing in his name. Nothing in his name. It was in his mother's name. It was in his sister's name. So we knew who he was, we knew where he lived, but nothing was in his name. If any of the cement companies had looked into that detail before selling, they would have been so much better off. And then we had another instance with the same commonality of ownership with closely related names or corporate entities. And there were multiple entities involved in a particular project. It was, again, some cement clients of mine. And this was a bankruptcy up in White Plains, New York. And what they would do, one company would buy the cement and make concrete and pour the concrete on a particular day. But as you know, once the concrete is mixed, you've got to use it or it's no good. So what they would do at the end of the day, if they had extra concrete, was they would make basically cinder blocks, and they would make these formed blocks, and they would take the blocks, not sell them, but just take the blocks and put them on the other property where there was a commonality of ownership, but different corporate entities. When we went into court and everybody is battling over who has what mechanics lien right and who had what security agreement, and of course the bank was screaming, and the judge was like, can somebody explain to me who's on first? And everybody started looking at me, and I was like, okay, Judge, yeah, because I actually represent two of the creditors here. So this creditor has mechanic lien rights in this company, but that company fraudulently gave product to the sister company, and that sister company sold those goods and kept the money and didn't give it to anybody. And the judge was just scratching his head saying, oh my God, what are we going to do here? Well, ultimately what we said was, Judge, you've got to convert this case to a Chapter 7. That's the only way we're going to unravel, because there is such a commonality of ownership. In that case, it was nothing done wrong on the part of the trade creditors, because these were actual thieves. They intermingled funds, they swapped material back and forth, fully expecting nobody was ever going to figure it out, and therefore they were going to be home free. So let's take a look at some of the common fraud schemes. Fraudulent credit applications, falsified information, or you may see misrepresentation of financial statements if you can get a financial statement. And for so many years, you trade creditors would tell me, Wanda, we can't get financial statements. Well, that's absolutely false today, because any company, no matter how small, has something on the computer, some kind of QuickBooks or Quicken or some other internet program, and they can print out a profit and loss statement or a balance sheet. It may not be accurate, but at least it's something. So when they say, no, we don't have anything, we can't give it to you, don't accept that anymore. They may give you fake business references. So when you call to get a reference, you get, a glowing reference. And it could be the brother-in-law giving you that reference. You may see identity theft, where they are using stolen identities for credit applications, and you run a credit report or you run a Secretary of State search, and it's a legitimate company, only that's not really the company. And what they do is it's a bait and switch. Well, they ask you for credit under the name, we'll call it, ABC company. And then when you ship the goods, they say, oh yeah, use our trade name. Our trade name is Annabelle. There's your ABC or your AB. So you ship to Annabelle, and you ship to Annabelle company at such and such an address, which is not the address on the credit application for ABC Corp, because they stole that identity. You now ship to an unknown location, because how many of you would take the time to go back and say, wait a minute, this is not the location on your credit application, and the goods are there and they're gone. And they're gone. You might also find purchase order fraud. One of my clients, and this happened to them in the pharmaceutical industry, received a purchase order or what looked like a purchase order from one of their customers. The only difference was when they got the purchase order, they were very excited because the purchase order was for $80,000 of product that my client knew this customer always bought from a competitor. So they got excited. Wow, they always bought that product from them. They're going to buy that from us. That's fabulous. Nobody bothered to pay attention to the fact. And the purchase order looked perfect, looked absolutely perfect. No one paid attention to the fact that the $80,000 worth of goods was going to a location that had never been used before. They sold the $80,000. They delivered the $80,000. And what did their customers say to them? Oh, yes, that is our purchase order, except we didn't issue that purchase order to you. We issued that purchase order to your competitor. And we got that $80,000 worth of goods and we paid them. And they found that where they had dropped the goods was an empty location surrounded by a chain link fence. And that happens more often than you want to think. Another client was involved with 5 different companies, shipped to the 5 companies, including one in the Dominican Republic. It was supposed to be product to build a hotel. They had beautiful architectural drawings of the hotel. They delivered their goods. They didn't get paid. They had arguments with the other 4, but ultimately got judgments against the other 4. But this one in the Dominican Republic, we couldn't go after. We found an attorney in the Dominican Republic, and what they informed us was credit applications and purchase orders are no good here. You need an actual contract. And anybody doing business in the Dominican Republic knows you need an actual contract. So number one, you don't have an actual contract. We probably can't sue, but we'll take a look at it. And the next day, the attorney calls me back. He says, Wanda, on my way home last night, I decided to drive by this beautiful hotel. There was nothing there other than a hole in the ground. Whatever your client had shipped went elsewhere. So fake purchase orders. So then you want to know, well, what are they doing? What happens when they dispute? We didn't order that from you. We don't want it from you. We're not paying you for it. And they claim your goods were never received, or they allege defective products without cause. How do you dispute that? Well, it comes same back to what the instances I was talking about already. Where did you deliver those goods? And do you use a common carrier? Do you use your own trucker? Signed for the goods. If it was your own trucker, did he see an empty lot and just drop the goods? If it was a common carrier, how did they deliver the goods? What kind of bill of lading do you have? So you'll see that they will create false disputes in order not to pay for the goods. You'll also have refusals to pay. Now, In one instance, I had a client, the credit was opened under the name of, I'm just going to create a name for the moment, Southwest Holding Company, Inc. And they legitimate company, legitimately opened, ran all credit checks. This Southwest Molding Inc. really existed. But as they started to buy goods, they were delivering them to Southwest Molding without ever thinking twice. And they were getting checks from a company called Southwest Molding LLC. Well, the client had actually taken a security agreement at the beginning of the business transactions and had a good, solid security agreement against Southwest Molding Inc. And they paid very well for a year and a half, and then they stopped paying. And now the client says, well, I'm going to go after them for payment, and I've got a security interest, so I'm going to foreclose on the security interest against Southwest Molding Inc. And we sued, and their answer came back, and they said, you have no security interest. Didn't you notice for the last 6 months you've been delivering goods to Southwest Molding LLC? And that was the company we were paying by. So you have no security interest because the goods were all being delivered to a third party. Of course, the owners were identical. So we filed a bankruptcy against them. We went into the bankruptcy court. At the end of the day, the court found they changed their name deliberately to defraud the creditors, knowing the creditors were never going to pay attention to the name, to the fact that it is no longer an INC, but it was an LLC from whom they were receiving checks, found fraud, directed that we could go and take the premises, and we did, but we realized we lost a lot of money in the time it took to get that final judgment. So, yeah, we were successful, but the whole amount of money was never recovered. Now, what we're also seeing, of course, is Disappearing Act. The businesses just close or change their names to avoid payment. I've had clients send their salespeople by the construction site or by the general contractor or subcontractor's place of business, and they see it padlocked and closed down and weeds growing in the lawn, and they just close down and walk away. We also see checks coming in from closed or insufficiently funded accounts. That's probably easier to deal with because it'll happen once. You'll see a bounce check and you will stop shipping based on that one bounce check. Credit card chargebacks are worse because a company can charge back a credit card for at least up to 6 months. So you might continue selling, never knowing that 6 months from now, they're going to start charging back those credit cards and claiming they were unauthorized transactions. Or wire that never arrives. Just today, wire was supposedly sent to my trust account a week ago as a settlement payment. We went after a company, and the client accepted a payment of $4,000 a month for the next 2.5 years. And the first the first 2 payments they made by credit card directly to the client. The third payment was a wire to my office, and they sent me a confirmation that the wire was sent. Well, last week I had a lot of things going on, and I didn't check it till today. I checked it today. Money's not in my account. Contacted my bank. He says, no, he said, their bank has to trace it. I contacted this man, John, and he says, no, I can show you evidence the money was taken out of my account. And he sends me another photo of supposedly a wire. And I said, well, John, my bank tells me you've got to trace it. So he called me this afternoon. He sounds like he might actually be honest. He called me this afternoon to tell me that he had been on hold with different departments in his bank for about 40 minutes. And he was going to personally tomorrow go to the Bank of America and find out what happened. I said, all right. I said, but you've got another payment due on September 1st. The last payment was supposed to be August 1st, and it came in the third week of August. Let's get this going. So maybe he wasn't trying to be a fraudster, but that wire that never arrives. And note, by the way, if someone is going to buy goods from you on a wire, make sure you do not deliver those goods. If it's a cash in advance, make sure you never deliver those goods until that wire hits your bank account. So some detection techniques that you should think about and be aware of: thorough background checks on your credit applicants. Verify all financial information. I know getting a reference or information from banks are very hard, but you should ask for it. I would ask for, a actual bank statement. Let them redact it, but give you an actual bank statement. Regularly review all the transactions and all the accounts. There is software out there that can detect fraud, and you should have your company look into fraud detection software. Look for red flags and warning signs. Maybe you've been dealing with this general contractor before, suddenly involved with a project with unusually high costs. Well, either he got very lucky and landed a great project, or something's going wrong. Are you getting inconsistent or incomplete information? When you ask for a credit application or you ask for any kind of information and it's half-baked, well, then there may be a reason why it's inconsistent or incomplete. Or are you missing documentation? You asked for the EIN, you haven't gotten it. You asked for locations, you don't have it. Or you see unusual transaction patterns. They're buying goods from you that they normally wouldn't buy or that normally wouldn't go into this particular kind of project. That's a red flag that, wait a minute, I need to know more before I'm going to allow these goods to leave my hands. Backing up for a moment to the thorough background checks on credit applicants, we have one client now who is involved with multiple customers, all family owned by the sister, the brother, the sister-in-law. Some of them own personal property. Our clients have authorized us to pay for background checks on them. Each background check is costing them about $125, but they said, no, we were into this company for close to $4 million. We got them down to $2 million. Now that they're creeping back up, we don't want to be out there again for $4 million. We want guarantees, and we want to know there's something to back the guarantees. We had to end up telling them, I got news for you. The guarantees are good. The people are legitimate. We have checked their social security numbers. They really exist. But the homes that they own are mortgaged to the hilt. So you got personal guarantees. You take a personal guarantee, make sure it's worth the paper it's written on. Because if they got mortgages to the hilt, there's nothing there for you. Use software to detect anomalies in financial and project management data. And again, know where your goods are being delivered. So I repeated on this slide purposely. Again, where are your goods being delivered? Who is going to be responsible for payment? Is that entity or location actually part of the project? Have you checked that location to know that it even exists? In the case that I had with property in South Carolina, it turned out all the property did ultimately exist, but they weren't always under the name that our client thought they were under, and we had to be doing title searches to find out who owned what property in order to do proper, before you can do a mechanics lien, you've got to do a title search to find out who really owns that property. And do you perhaps have a joint check agreement in place? Does your credit application have terms and conditions that control the payment? So legally, this is interpreted as a timing mechanism, not so much as a payment mechanism. The courts will allow a reasonable amount of time for payment to be made, but after a period of time, it becomes unreasonable. Basically, you need to strengthen your own internal controls, and that's implement policies, separate duties among people so that not everybody's doing the same thing. I'm repeating, watch your background checks and look for verification before entering contracts. Look at your business relationships before it reaches a $4 million level. Train your employees about fraud risks and encourage your employees to report any suspicious activity. Maintain legal agreements that are going to allow for swift action in case you do detect fraud, and properly document all change orders. And I've said it before, how do you accept them? Who gave you the change order? And verify that the person giving the change order is authorized to do so.
Well, that was a lot of great information. I have been asked by a couple people to actually get a copy of the presentation. So if you would provide that, that would be awesome.
Yes.
But I want to thank you for taking your time to share this information.
I just wanted to make a quick comment that we recently, literally earlier today, decided, because some of our sister companies have experienced some fraud recently, we've decided to have them, we've removed the credit applications off of our website. So people can't just go to the website and pull the credit app and be an unsolicited, applicant, right? So that means they've got to reach out to somebody on the front end to be able to apply for credit. So we've done that as a precaution to try to mitigate some of the fraud that's been happening.
That's really interesting because everybody's trying to go digital and put them on the website. Yeah. Interesting.
Thank you for sharing that, Wendy.
Yeah, most definitely. Thank you, Wanda. It was a great presentation.
Thank you. Always my pleasure.
Thank you again, Wanda. And to everybody else, we'll see you next time.
All right. Have a wonderful afternoon.